Welcome to the SNN Network Canada virtual event. I'd like to introduce our next presenter, Jesse Ledger, CEO of Miravo Healthcare. Sir, the floor is yours.
Great, thank you. And good morning, everyone. Thanks for taking the time to join me today. I'm also joined by Mary Jane Burkett, our Chief Financial Officer, and so we're going to take you through a brief overview of Miravo Healthcare today. So before we get into the deck, just the usual forward-looking statements, legal disclaimer, and we also use some non-IFRS measures that are referred to more in the financial section of the slides. There's some reconciliation towards the end of the deck for those of you that are interested. So, Miravo Healthcare. Miravo is a Canadian-focused healthcare company with global reach. We are a commercial stage company, so we are generating revenue and we are profitable. We operate three distinct business segments. Our commercial segment, which is our Canadian pharmaceutical business, we've got 38 sales reps across the country that call on physicians. We're very much focused in pain and neurology, as well as allergy and dermatology, and we've got a couple of products that we focus on in those therapeutic areas that I'll touch on in a few minutes. Our second segment is our international business, our licensing and royalty segment. So this is where we out-license some of our proprietary products and sell them through licensed partners around the world in markets like the United States, Europe, Southeast Asia, and so we simply collect royalties in this particular segment. The third segment is our production and services segment. We actually have an FDA-approved manufacturing facility just outside of Montreal, Quebec, and so we manufacture some of the products that we sell internationally through partnerships, and so this is the segment where we capture those revenues. So this is all supported by all of the in-house infrastructure that's necessary for operating a pharmaceutical company in this day and age, regulatory affairs, quality, medical affairs, safety, et cetera. And really what this is it's a platform that's very scalable. And I'll go into some more details on that later on. So just a little bit of context about where we've come from. I mentioned the three business segments. We acquired essentially our commercial segment and some of the international royalty streams in a transaction at the end of 2018. And as you can see on this slide, our business prior to 2019 was $17–20 million a year. It was marginally profitable, and at that time it really was a manufacturing business. And so the acquisition of the commercial business and some of those international products really was transformational, both from a top-line revenue standpoint and an adjusted EBITDA standpoint. But more importantly, as I mentioned previously, it provided us with an operating infrastructure that's scalable. And so that's what we're doing now. We've got great products that have organic growth opportunities, but we've got a platform that can easily take on additional products through business development activities, and that's a big focus for us. So let's dig into the individual segments a little bit more. So I talked about the commercial segment. This is our traditional pharmaceutical business here in Canada, where we sell and promote products to healthcare providers, physicians, pharmacists, nurse practitioners, et cetera, across the country. The four products that we're really focused on in this segment are listed on this slide. We have two migraine treatments, Cambia and Suvex. Cambia is a first-line treatment. It works in about 15 minutes, so it's the fastest-acting migraine treatment on the market in Canada. Suvex is more of a second-line treatment. It's a combination of two commonly prescribed migraine medicines, sumatriptan and naproxen. Cambia has been on the market for 10 years. Suvex was just launched about a year ago. The other product that's sold by our sales force, our national sales force, is Blexten. This is the biggest product in the portfolio. It's a prescription antihistamine, so it's an allergy drug, and it's been on the market for about 5 years so far. It's got comparable efficacy to the other prescription antihistamines, but it's got a far better safety profile, and this is why this business is growing and why doctors like prescribing this product, and I'll talk about that in a little bit as well. The fourth product, Neovis One and Neovis Plus, this is an injectable HA, hyaluronic acid product for osteoarthritis of the knee, and so we've got a separate sales force that covers sports medicine and orthopedic surgeons across the country. So these are the four products that we're focused on in our commercial segment. This is where all the sales and marketing resources go. We also have other products in the segment These are our legacy products, but we don't spend any money on promoting these products. They're simply cash cows. They're in sort of milk mode at this point. They've either lost exclusivity or they have generic competition, or they're just not core products for us. And so all of the sales and marketing activities are really focused on those other 4 products that I highlighted. Overall, the commercial segment year to date represents about 65% of our top line revenue. So the second segment, our licensing and royalty segment, as I mentioned before, this is really where we capture revenues generated from royalty streams on our international business. This is about 20% of our revenue in the third quarter of this year. You see the products, the key products that are represented in this segment below. Vimovo is an oral fixed dose treatment for osteoarthritis. It's sold in the United States through Horizon Therapeutics and in the rest of the world by Grunenthal, a German company. We also have Results, which is a head lice treatment that we own global rights to, and there are a few other products here, Pennsaid 2% and Suvex, which we've signed recent deals with new international partners around the world, and I'll talk about that in a little bit as well. Most of the revenue in this segment comes from the Vimovo business. And as you can see on the slide here, a generic version of Vimovo did enter the market in the United States in March of 2020, so over a year ago. And so we're now starting to see the impact of that generic entrant to the market. Obviously, year-over-year revenue for the U.S. royalty has declined. This has had no impact on the international royalty stream from Grunenthal, but this is one of the big reasons why our year-over-year revenue has come down, and Mary Jane will touch on this in a few slides. Our production and services segment, again, this is our historical manufacturing business. In the third quarter, this is about 14% of our revenue. 80 to 90% of our revenue on any quarter comes from Pennsaid 2% in the United States. We have a long-term exclusive supply agreement with Horizon Therapeutics, who sells that product in the U.S. market, and we manufacture the finished product for them. We also recently launched Pennsaid 2% in Switzerland through our partner Gebro Pharma. That was in January of this year. And so there is incremental growth opportunity here. It's similar to the licensing and royalty business where we've got new partnerships and new market expansion opportunities happening. And I'll get into more detail on that later on. So maybe I'll hand it over to Mary Jane here, who can take you through our financials and the cap structure.
Great. Thanks, Jesse. We released our Q3 results a couple weeks ago. First, I'm looking to walk you through our adjusted total revenue, which is essentially a cash-based revenue number. This is, of course, a non-GAAP measure, which is reconciled to our financial statements at the back of this presentation. Quarter over quarter, we saw an increase in adjusted total revenue, but year over year, a decline, really as a result of varying movements in our 3 business segments that Jesse just walked through. Our commercial business segment saw an increase really as a result of the increase in sales of our promoted products, being Blexten, Cambia, Suvex, and Miravo. Our production and service business segment saw a decline in the quarter and year to date, mainly as a result of timing of Pennsaid 2% product sales. And we also saw some headwinds with the stronger Canadian dollar, as most of the revenue in this segment is denominated in U.S. dollars. In our licensing and royalty business segment, we saw an increase in the current quarter, but a decline year over year, mainly as a result of 2 items. So the U.S. Vimovo generic launch in the prior year really eroded the contribution from this royalty in 2021. And then also in the prior year, we received a $2.4 million milestone from Takeda related to their use of our Yosprala IP in Japan, which was a one-time item in 2020. However, we anticipate receiving another milestone related to this contract in 2022. If we take a look at our adjusted Eba Debt, which is again a cash-based earnings number, we saw an increase in the current quarter versus the prior year quarter, and then we were down year to date versus 2020. We saw an increase in commercial business gross profit, both in the quarter and year to date. And we saw increased investment in our sales and marketing infrastructure, as well as G&A expenses, really to advance the company's strategy by enhancing promotion on key products and building out our business development team. Year to date, the decline is mainly derived related to the U.S. generic Vimovo launch in 2020, as well as the Yosprala milestone that I mentioned previously. We are financed by debt, so we have just under $90 million US of debt on our balance sheet, which is comprised of 2 loans, both carrying a fixed 3.5% interest rate. The first loan, being the amortization loan, is repaid on a quarterly basis at a minimum of $2.5 million US per quarter. The convertible note is not prepayable and will mature December 31st, 2024. We take a look at our cash and capital structure. There are potential shares associated with our outstanding debt. So there's 25.6 million warrants at a $3.53 strike price attached to our amortization loan, and the convertible loan can convert at Deerfield's option at $2.70 per share. We're currently trading around $1.50 per share on the TSX and OTCQX. We ended the third quarter with $28.4 million of cash on our balance sheet and a market cap of $18.2 million. Jesse, I'll hand it back to you now.
Thanks, Mary Jane. So you've got a sense of what the business looks like. Let's talk a little bit about the growth strategy and some of the things that are happening. There are a number of different ways that we're looking at growth. A big area of focus for us is continued business development. This is a company that was built on business development. There's a lot of expertise around the table, and what we've made some investments earlier this year in a business development team, really to identify new products that we can bring into our existing infrastructure and bring those products to market and launch them. And so in licensing or acquiring growth-oriented products is high on our list of priorities. We're also looking at launching new products from our existing portfolios. We've got line extensions that I'll talk about. Of course, expanding the geographical footprints of our products globally. So again, some additional license deals that we've entered into recently, and I'll talk about that. And we also have our manufacturing facility that does have spare capacity. It's operating at about 30% capacity today, and it's profitable. So any additional business that we put in there, it really drives incremental growth on the bottom line. So really looking at growth in a number of different organic and inorganic pathways here across all segments of the business. And I talked about business development and sort of the expertise that's in the company. That's my background. My entire career has been focused on M&A and business development, and the rest of the team has all been involved quite significantly in business development, whether it's product acquisitions or in-licensing, corporate structuring, financing, all the legal elements. This is a team that has done many transactions in the past and knows how to get things done. And of course, if you look at our portfolio today, 20 of the 22 products have come from business development transactions. This is how the company was built, and this is how we'll continue to grow the business moving forward. And of course, we've got a number of partnerships. I think this slide really highlights some of the companies that we work with, both on an in-licensing and on an out-licensing standpoint. But you'll see big multinationals like AbbVie, Horizon, Novartis, Takeda, and then smaller regional companies as well. And so, we know how to operate on both sides of the table, whether we're a licensor or a licensee. And I think that knowledge and this track record of partnerships on a global basis really helps differentiate us from many of our peers in terms of our ability to identify deals, get them done, integrate those products and businesses into our own, and turn them into a success. So some of the sort of recent growth opportunities, I mentioned earlier that we launched Suvex, our migraine treatment product, in Canada in September of last year. In the first year of launch, over 10,000 prescriptions have been written, which is a nice achievement despite the headwinds that we've experienced from COVID. Obviously, not as many patients are seeing physicians, at least in Canada, and so that has slowed our growth somewhat, but the trend obviously remains positive, and we've got high expectations for the coming years. Another product a new product that's coming to market, we received a Health Canada approval for the pediatric version of Blexten, our allergy medicine, back in the summertime. And so now our label has been expanded to include children as young as 4 years old, and we have 2 new dosage forms that will be launched in the first quarter of next year, of 2022, an oral solution as well as an oral dispersible or a quick melt tablet both of those formats will be at the pediatric dose and will be complementary to the existing adult dose that's currently available on the market. So from an organic growth standpoint, Blexten is the biggest product in our portfolio, and it's also a product that has significant growth potential remaining. You can see here that this slide shows the green line is the market share penetration from a prescription standpoint in the Canadian prescription antihistamine market, and Blexten's achieved nearly 19% market share since we launched it 5 years ago. And normally that would be a great achievement, but we know that there's more to come. And where are we going to continue to get this business from? It's from our competitor, cetirizine, which is the green line on this chart. When we launched Blexten, cetirizine was up around 70% market share. It's down up north of 50% market share today, and we know that we can continue to take that market share. We believe that Blexten will be the #1 prescribed antihistamine in Canada within the next couple of years. So plenty of organic growth to come from that business, and really what's driving that is just the effectiveness of the product, the safety profile, and the simplicity of the prescribing decision for physicians. Cambia, I mentioned earlier, is another one of our migraine treatments. It's been on the market for 10 years. It's really been a steady growth product for us since the beginning. Some headwinds earlier this year, again, as a result of COVID, and just not as many patients seeing their physician, many patients relying on OTC treatments until they're feeling more comfortable to go back to see their physician. So while there's a bit of a dip in market share in the third quarter of 2021, we believe it's a short-term blip, and with the world reopening again in 2022 and beyond, that we should see a return to the growth that we had experienced historically. From an international standpoint, I touched on some of the deals that we've done, and this slide gives you a little more detail on what those deals are made up of. Suvex, our migraine treatment, we announced a deal in the summertime with SK Chemicals in South Korea, and we also announced a deal around this time last year with Orion, a Finnish company, for a number of Northern European markets. And so both of those deals involved those companies taking our registration dossier, filing it with their local authorities, and ultimately getting approval and launching these products and putting the sales and marketing resources behind these products to turn them into a success. And so we earn milestone payments from these companies, as well as royalty on net sales once they launch them. And then we also earn revenue on the supply of the finished product. While we don't manufacture this product, we do manage the relationship with our contract manufacturer, and so we have multiple sources of revenue for these deals. We're anticipating commercial launch in both of these markets early in 2023, obviously subject to regulatory approval in those markets. And then a couple of the other products results is our proprietary head lice product. This was launched by the Mentholatum Company in the U.S. market in October of this year, so it's now available in the U.S. market. This is a highly differentiated head lice treatment. It's pesticide-free. It works, has a treatment time of about 5 minutes, so it's the fastest treatment time on the market. And so we're excited to have that product available in the U.S. to complement the sales that we already experience in Europe and Canada. And then, of course, I touched on earlier our Pennsaid 2% launch in Switzerland with our partner Gebro Pharma. So they're moving into the second year of launch and gaining nice traction there. So a number of milestones have been achieved over the course of the year. I suppose the big one that's not listed here is, and it's always hard to predict, is I talked earlier about business development. We've got our team has evaluated over 100 opportunities so far this year. We've identified a number of fairly high potential and interesting opportunities that are moving through term sheet and due diligence phases. And of course, we anticipate being in a position to launch some new pipeline additions to our product portfolio in the coming months. So stay tuned for that. This, as I said before, is a major focus for us. And really the idea is to be in a position to launch at least 1 to 2 new products every single year for the foreseeable future. And what this will allow us to do is to create a long-term and sustainable product portfolio with revenue growth potential beyond the period of time when we anticipate losing exclusivity for some of our key products at the end of 2024 and 2026. So stay tuned for that. So just before we kind of open up the floor for some questions, I'll just revisit some of the highlights. Again, we're a diversified specialty pharmaceutical company. We are commercial stage. We've got more than 20 revenue-generating products that are on the market today. A number of different pathways for growth, both inorganic and organic, through our existing products, as well as new business development opportunities and international market expansion for our proprietary drugs. Everything is backstopped by strong intellectual property portfolios and long-term partnerships. We've consistently delivered solid financial results on a quarterly basis that Mary Jane touched on before. The business is generating strong cash flow that ultimately has led us to a $28.4 million cash position as of the end of the third quarter, but ultimately also allows us to continue to service the debt that we have with Deerfield with that low 3.5% fixed interest rate, and to make the incremental investments we need to make in our business. And so with that, I'll stop, and we'll just take a second here to take a look at the questions, and so just bear with me here. So the first question is, can you talk more to the new BD team you have in place and the expected future value creation? And so, yeah, it's a great question. So we've added three people to join our company that are 100% focused on business development. We've got an individual who has a more than 20-year experience in business development in Canada. We've got a clinical and scientific person for evaluating the clinical particulars of the drugs that we're looking at, and a financial analyst that is able to model things and build out our valuations. And so having a 100% dedicated team as opposed to having to rely on the resources from other departments that ultimately have day jobs is great. And this really allows us to look at way more opportunities than we would be if we were sharing resources. And so, really the expected future value creation here is that we'll be able to accelerate the timeline to evaluating and closing transactions. We'll be able to look at more opportunities and ultimately have more products that are in the portfolio that will be launching, in the 2022, 2023, 2024 time horizon. And so that's the game plan. And ultimately, we're really focused on the low-hanging fruit for us is additional products in those therapeutic areas that we're focused on today: pain, neurology, allergy, and dermatology. And so we've got some interesting opportunities in those areas that we hope to be in a position to talk about in a little bit more detail in the coming weeks and months. So the next question here: what is your vision for the company for the next 12 months? And it's a great question, and I think it kind of ties into the business development piece. The vision is really to bolster our product portfolio. We recognize that there's a potential revenue gap with some of our key products at the end of 2024 and 2026, and so the vision is really to build that sustainable product portfolio and pipeline to take this company into 2030 and beyond, and that's really where I'm focused, where I'm looking. The day-to-day business every day is operating primarily according to plan, obviously with some slowdown because of COVID, but that's temporary. But really the vision is to ensure that this is a long-term and sustainable business, and to take advantage of that platform and the infrastructure that we acquired at the end of 2018. And I've got another question here: who are some of your Canadian competitors, and how do you differentiate yourselves from them? So, great question. We do have a number of peers, companies like Medexus, HLS, Knight Therapeutics. Those would all be good direct competitors. And I think the way that we differentiate ourselves, to a certain extent, all of these companies are looking at different therapeutic areas, or in some cases different geographies. HLS is very much focused on cardiology. Medexus has a big focus on sort of oncology and rare disease, and really expanding their business into the U.S. market. So those are some of the things that differentiate it. We are obviously focused on neurology and allergy and dermatology. It's not to say that we can't go outside of those therapeutic areas, but everybody seems to be playing in slightly different parts of the sandbox, so to speak. And I guess one of the other things that helps differentiate us is, we're not just a Canadian company. Yes, we have a very strong domestic business, but we also have a manufacturing facility, and we also have an international business. And so that allows us to generate revenue streams from a variety of different sources, to have a very diverse business that is, perhaps a little more insulated from swings and changes and unexpected events than some other businesses where, perhaps there's only one business segment in the Canadian market, or a reliance on one particular product. So I think those are a few different ways that we're differentiated from our peers. And then there's another question here: any further opportunities to market or distribute some of your existing partners' products in Canada? And so, it's a great question, and this is something that we're always looking at, because the best companies to do business with are the companies that you already have well-established partnerships with. And if you already work together in a good way, and it's a mutually beneficial relationship, it makes sense to add more products to the mix. And so this is something that we look at all the time with all of our partners, evaluating the products that they have those discussions. Obviously a lot of our partners have an existing presence in Canada. Companies like Horizon and some of the other big multinational companies already have their own operations in Canada, so it's not always possible for us to get access to their products, but we definitely look at this on a regular basis to see where else we can leverage those relationships and find some easy wins with partnering opportunities. And it goes both ways, in licensing and out licensing as well. So I think that just about covers it here from a question standpoint. So I'll wrap things up. Once again, thank you very much to everybody for taking the time to listen to myself and Mary Jane today. We're always available if you've got other questions, follow-up questions afterwards. Feel free to reach out to us through our website. You can go to the Investor Relations section at www.miravohealthcare.com and send a note to our IR group. And we're happy to answer your questions or have a follow-up conversation. Or, of course, we're available for one-on-one meetings through the SNN Network Canada portal over the rest of today and tomorrow. So with that, thank you very much. Happy holidays, everybody, and take care.